Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's the Wednesday edition of Trader Talk in today's market, and I'm your host, Kevin Horner, joining you from the Denver studios today. Pleased to be joined by fellow coach and my friend Brent Moores. Good morning, Brent. Good to see you. How are things?
Hey, good. Glad to be with you, Kevin. And I was actually out of the office yesterday and kind of out of touch with the markets. But hey, looks like it was a big day yesterday. We'll see if we continue that today.
It was a big day yesterday. We had a new high close in the SPX, some breathing in oil. We'll take a look at maybe what led to some of that stuff as always. So, lots of charts to get to with you all this morning. We are joined by our friend Scott Thompson there in the chat today, everybody. Say hey to Scott, who will get to comments and questions. Brent and I are unable to, but we like to keep an eye on what's happening in the Q&A there. So, where we can, we try to bring your comments and questions to bear in our discussion. So if you've got things you'd like us to address, you're welcome to post them in there. No guarantee we'll get to anything or everything there in the chat, but we do try. So please feel free posting in there for the duration of our show. Remember, you can follow us all on X. We're available there individually. Brent Moore CS, Scott Thompson CS, Kevin Horner CS. Great spot to find us when we're not offering classes for you here on the channel. And as a reminder, we are on the channel live each day from market open till about 4:45 p.m. Eastern. So lots of live content from us here every day of the week. With that, let's jump to our disclosure so that we can get to the charts at hand. So first of all, remember everything we discussed today should be considered informational and educational only. We do not make recommendations nor endorsements for any specific approach to trading the market. What we do offer are concepts and strategies of technical analysis that traders might choose to employ. Whether you choose to employ them is entirely your discretion, of course. So make sure that you are considering technical analysis as one of your decision-making puzzle pieces, not the entirety of it. And any of these concepts that you do choose to work with, customize them to your liking, build them into your own trade plan, and then adhere to that trade plan as best you can. That consistency can reward us as traders over time. Now, if you are new to our class, everyone, we do a top-down review. We're going to start broadly, but one of the things I've heard from many of you lately is that we spend too much time on the major indices. So we'll try to be a little bit more expedient in our review of the S&P 500, the NASDAQ 100, and the Russell 2000. We will work our way through sectors on the move, incorporating as well the industry groups like semiconductors, for example, and then get to some stocks in the news. And I've heard from many of you, you like more individual equities when we have the opportunity to discuss them, and we have a more than a fair share of them in headlines today. So we will try and do that for all of you. Now, with that, let us take a look at the S&P 500 here, Brent, as we like to do. That's not the S&P. Let's go with the S&P. Here we go. All right. So we actually had a request to do something already, and I've already drawn it in, Brent. That was the potential for a Fibonacci extension breakout. Notice we're trading again at all-time highs here, Brent. Speak to us a little bit about one, what you're seeing from this, and then two, maybe this Fibonacci breakdown that I've applied to the chart.
So all-time highs. So very often when we're looking for like a target price or something, when we have a breakout, we'll look at a past high at some point. Well, we don't have that. We're at an all-time high. So it can be a little harder to try and find like a target price. So sometimes we'll use a price pattern such as the width of a channel or something like that. But one of those approaches that people use to coming up with a target of how far it could potentially run. And of course, there's no guarantees here, but we'll use a Fibonacci retracement level with extensions. And that's exactly what you have on the chart. Here you have a level you drop from a low to a high,
Mm-hmm.
and in this case, you have that low is that zero line there, or if you draw from the high to the low, I guess you get the extension. So
Yes.
let me just kind of correct what I just said there. If you draw from low to high, which you can do and get the retracement levels, in other words, if you draw from low first to high second, then you get the 0 to the 100. But if you start at the high and draw down to the low, then you'll get potential target areas here. And that's what we're looking for on these. And hey, does it mean it's going to run up that? I don't know if it's going to, but what I do know is not only did we have a breakout, and sometimes with breakouts, we're a little iffy on it. Did it, it
Hmm.
broke a little bit above it. No, this is a bold, assertive breakout above the high, all-time high yesterday. And so far today, we're continuing through with that.
So far, and let's obviously that's what we're looking for. We have no, as you said, we basically took the lid off with this breakout
Yeah.
on Monday, right? And that Monday breakout of this consolidation tells traders, hey, there's not buying a selling pressure up above us. Now, we don't know where that selling pressure will come in once more, but for the immediate future, this is a true breakout, and the calculations incorporated do make some sense. So we did the Fibonacci extension, drawing from the peak to the low, and that's what gives the extension target at 78.50 approximately. No guarantee to be achieved. I think, Brent, we would also see a number of traders suggesting that 7,800 as a round figure could easily act as a
Yeah.
spot of resistance in the near term also. And then there's another calculation that can be done here kind of quickly, and that's just the mathematics behind the low to the high, or rather, I should say the high to the low. So the high here was what, 76.20, and then we draw that to essentially the low back there. I like to do it with a nice 90-degree straight line, nice and clean. And so it would look something like this. And then you could take that line and activate it and add it to the top of the breakout channel, and now that gives you another level. So once more, what you are offering are maybe a series, or more importantly, a zone of resistance or a zone for potential target, Brent. And some traders like the idea of layering those zones. Exit strategy for a portion of the trade at one layer, and then a little bit higher, another level for sale, and then a little bit higher, another level yet again.
Yeah, and very often, most often, you're going to have different potential targets or targets either to the upside or the downside when we're looking at these. But as you pointed out, I think it's an important thing. They're not, try not to get too precise in whatever level you're going to, because we don't expect it to go exactly to a dollar level and and reverse itself.
Hmm.
Instead, what we have is an area that's kind of an area where, some traders may look to, and as you mentioned, it's kind of can be a kind of a money management thing. Maybe you lighten up a little bit in your
Hmm.
position when we get up there and take some profits, and maybe not. Maybe that's just one, but that is one approach that you can use. And just to give you a measure of, the market was not doing great up until a few days ago. You can see that in that RSI at the bottom of the page, uh, because even after the huge move that we've had, we're still not quite in that overbought area, which would be the 70 zone there. Getting close, but we're
Hmm.
still not quite there. And so but it does show just how far we've run up.
It does. And, the breakout was significant this week. And so at this point, it's given the risk on feel to the broader market. Now, quick question was, drawing the vertical line is just simply the trend line here, everybody. So I use the trackball on my mouse to activate it. You tap that trackball down like a click, and it gives me the pop-up. You can also do the same right here in the lower right corner with those details. So that's just a trend line that I drew vertically and then activated and moved it essentially. Brent, one of the other things that we often discuss here, of course, is the look at the difference between the SPX and the SPX equal weight. Equal weight still broke higher with this move, Brent, and so I'm always encouraged when we see equal weight index of the S&P moving to the upside strongly. Boy, this is a real strong uptrend as well.
Yeah, the rally was not just kind of mega caps, which sometimes will drive the SPX, and when some other sectors are not doing very well, the SPX equal weight just kind of lags. Hey, this is strong. We've seen strong, broad-based movement in the market. Of course, not every sector moves the exact same in the market. We'll see as we look into sectors how some are moving more than others, no doubt.
Mhm.
but it is nice to see broader participation in the market here.
It is. And then there's a chart that our friend Rachel has updated for us, and I thought I'd bring that in just as a reminder of the strength you're getting from the S&P at this time. Brent, we're looking at for the percentage of stocks over the 200-day, the percentage of stocks over the 50-day, NYSE stocks making new year highs and those making new lows. And this is a great visual of the depth and breadth that we're seeing from this rally, Brent. We've got 66% almost of stocks trading above their 50-day and 70% trading above their 200-day in the S&P 500. Some good breadth values broken down here to validate what we're seeing on the charts.
And that's, just when we talk about market breadth, it is a common thing used by a lot of traders to try and give you I guess the strength of a market move. Because if the market move is comprised only of a few stocks and not broad participation, there's more skepticism about rallies or, a movement up or down, I guess, depending on which way we're doing it. So there's a lot of different market breadth indicators. You've just shown a few. That RSP, excuse me, the SPXEW is one measure. The percentage of stocks above a particular moving average is another measure. Higher highs, number of highs, up movers or down movers is another measure. And by the way, if you want to see on an individual day basis how many stocks are going up, maybe we could show people that too, Kevin. By going to like where we normally go to that Market Watch, where we normally go to the heat map. You go to Market Watch, you click on Visualize. That's kind of the normal look you have. But you go to Index Watch right up there at the top of the page where Kevin's going. And then you got to change the watch list. And you can change it to S&P 500 if you want. And there you can see in that upper left, you can see the number of advancers versus the decliners today so far. And of course, we're early in the day. But sometimes you get some surprising results on that. I mean, there's days where you see the markets going down and the better part of 400 stocks are advancing out of the 500 or vice versa on that. I mean, that's not the typical day, but sometimes you do see that. And although today, you can see we have more advancers than decliners on that.
We do. And my hope is that, Brent, our viewers take away the reminder that the market goes higher and it is not always led by the same groups. And so in the midst of this technology pullback that we've been witnessing, we've been carried by some of those other groups in the S&P 500 that are not as prevalent in the NASDAQ 100. So when we look at the NASDAQ, Brent, what I've drawn in is a very long-term bull flag. It looks like a bull flag, and it looks even more so like a bull flag here on the weekly with today's action and this week's action, doesn't it?
Yeah, that's a big flag there, Kevin. But
yes, sir.
That is a flag, no doubt. And you can see we're not at all-time highs on the NASDAQ, just because when it pulled back, it was underperforming. And when it pulled back further. But the NASDAQ does tend, because it's more tech heavy, it does tend to move more when it goes down. It tends to move more when it goes up. So we've seen a huge reversal in the last few days on the NASDAQ. So if you were to take the NASDAQ, in fact, can we switch to well, I guess you don't even need to. You can do on the daily chart, but if you just go the last 5 days on this and go measure low to high here, from the low to the high, just see what percentage move. This is a 10% move in the last, 5 days?
6 days, yeah.
Move, everybody.
6 weeks, 6 days.
And so that's you see that it's, you're not going to see quite as big a move in the SPX, and that's just because of the representation of what sectors are in the NASDAQ versus the S&P 500.
Yeah, so true. And as we think about, there was a question about really what led to the breakout. Why is technology rallying this way? Well, one, it's been under pressure.
Yeah.
Two, we had the so-called completion of a pretty substantial hedge fund being, well, pretty much wiped. I would say wiped out. They're still around, but there was a big hedge fund situation last week, middle of the week, over leveraged hedge fund that eventually got sold out for low percentages on the dollar, so 40, 50% of value, and those over levered positions out of that hedge fund led to a lot of selling in a lot of tech heavy names that were over invested by this one in particular fund. So the NASDAQ was beaten up a little bit. Then we had the conversation, or at least the political headlines relative to Iran, suggesting that there was not going to be an increase to conflict, and that led to a drop in oil prices. We'll look at oil momentarily. So this was a number of key bullet points coming together at the same time, Brent, that really led to the rallying beginning Monday morning. And so that's why we've seen what we've seen. The fact that we've taken out some important levels could give some traders belief that we've got continuation moves even still coming here. Now, Brent, when we look at what's going on with the Russell, this has also made a wonderful snapback in the face of the narrative about higher rates for longer.
Yes, we have the narrative about higher rates for longer, and rates in general have been going up. But the last few days, we have seen a little relief, I guess, in rates. So that may have helped the Nasdaq in the not the Nasdaq, the Russell 2000 in the last couple days here. But the reality is, this is moving like the rest of the market over the last couple days. Broad-based participation has been kind of the theme, I guess, of the day here, and that's good. It shows economic positivism, I guess, and we're flirting with all-time highs on the Russell there, and I'm not sure if we're quite there, but
I think
we're getting close. But
yeah, I mean, yesterday's highs made new all-time levels for us. Really, it's not the 20-day on this one. It looks much more stout at the 50-day. That low that we made here last week, you'll notice, was coincident with that range of prior highs, but it did not make a lower low. So, traders who are falling back on your standard laurels as it relates to technical analysis, higher low back here, higher lows back here. The structure of the rally in the Russell remains consistent right now. So
yes,
it's hard to argue with what you're seeing from the trend, Brent.
it does. And to Bill's point in the chat, he said profits seem more important than interest rates. That does seem to be the case because
Yeah.
interest rates have gone up on, for a good part of this, what you'd see on this chart here. And so the traditional narrative is small caps would struggle during that period, but they're not. They're doing well. And, obviously there's more than just interest rates that move small caps. Economic profitability and potential and are what do as well, and that's what we've seen.
So Brent, let's check in on the semis and then we'll go to oil. A real quick look at the semis here. I've got a Fibonacci move on there to validate the breakdown that we saw. This looks like a false breakdown at the 50% level, the 50% retracement of that entire move from April 1 basically to the peak we made, which for the record, everybody, was a tremendous move. So if you go back to March 30's low to the peak we made here on essentially June 22, we saw a 107% upside move, everybody. That happened over 58 sessions. That is 11 and a half, almost 12 weeks. We made an incredible rally. Brent, the pullback to the 50% level of this Fibonacci drawing that I've made seems to have validated that for buying. What are you seeing in the way of overhanging resistance on the semis now?
Well, I think we're right at a key level there. You have a line drawn there on the chart that we just kind of hit yesterday and possibly broke above just a little bit today here on this. And how did you get that? Well, that's kind of where we had some highs in the past, some lows, and that's, I think that's a key level. And then I would also point out the high that we had, I don't know, maybe 2, 3 weeks ago that we bounced off of as kind of another level, which we're almost at right now, quite just shy of. Those are kind of, we have a few key areas here. And so some congestion possibility here on the upside, but this can move quick. I mean, we've talked about how fast the Nasdaq can move. This can move quicker even. I mean, this is probably one of the most volatile aspects of the Nasdaq here. So
Hmm.
when we're going up, after we've had the sell off, it can go blow past these levels pretty quick, and that's what we're seeing. And why is it moving up so much? Well, keep in mind the context of just how far it went down, and that gives you an idea of how quickly it can go up. Also, I would say, keep in mind, like whereas the S&P 500 is at all-time highs, we're still a ways off that for semiconductors, which is what we're looking at
Hmm.
here. So,
And one other reminder, everybody, a lot of you traders look for the break of that downtrend, whether you took it from the true peak and incorporated this high, or you wanted to capture these peaks in here. Some traders would say we've broken the downtrend line, and that can be an initial entrance back into trend as well for some traders. Some of you are, I'm all in, all out, and we broke the downtrend line, therefore I'm all in. Or a lot of you also follow the idea that you piece into those opportunities. So a broken downtrend might be 25% deployment for a position and wait until we make a higher high, and then you deploy another 25%, just as an example. These processes are manners that we traders need to develop for ourselves, but I try to bring them to the table as frequently as I can because there's a lot of ways to go about trading the market. What's important is that we trade it to our own personal comfort. So try to keep that in mind. You're right, Bill. We've noted the semis negative to start, but wow, did they quickly flip positive. That's not really a shock given the exuberance we're experiencing this week. So let's see to what extent we get some continuation. Clearly, a move through the 50-day would be a significantly bullish development for the semis here. All right. Let's talk about that move in oil, Brent. I'm going to bring up the futures on that CL. We're not advocating for futures, of course. I'll put up all my major moving averages. Just remember, futures trading, like options, carries a higher level of risk. You can trade futures at Schwab, but you do need to be approved to do so. And we ask you to go through some hoops to validate that familiarity on your end. Get yourself approved if you want to trade futures. What we're talking about today, Brent, the level to which we have pulled back. We got rejected at the downtrend line just about 2 weeks ago, sitting at 75 or so, 75 and a half, pretty close to that 200-day moving average.
yeah, so we'll see if we bounce here. I mean, today is not a big mover today, but this is obviously dependent upon geopolitical events. And it's not just what happens on a day-to-day basis geopolitically, Strait of Hormuz, Red Sea, that news can certainly affect that.
Mhm.
But it's people trying to look at the future of where they feel things are going to be. Hence, we have some backwardation on those futures contracts there, Kevin. We can
Mhm.
see that if you go to the trade tab and you look at the dates of the expirations for those symbols there. Actually, could you go and change that from 3 months and see if you can do all contracts?
You
Do
got it.
all. Okay.
All right.
And then what you can see is if you look at that last price column right there, yeah, uh, that's the most active contract is the nearest expiration. And then as you go out further in time, it's pricing in lower prices for oil. Well, what is that saying? Because that's not the typical structure of things. The traditional structure is as you go out further in time, you would expect the contract to be more expensive just because of like carrying
Mhm.
costs and stuff like that. That's not what we're seeing. As you go out further in time, the contracts are cheaper. That means traders, and of course, who knows where it's going to go? I don't know where it's going to go totally, but traders are expecting over time lower lower oil prices. In other words, we don't know what's going to happen over the next week or two, in terms of US and Iran and whatnot.
Mhm.
But people feel that over time, things will kind of maybe ease up a little bit on that. Now, I said traders are trading that. We're not talking about trading here. We're just talking about the price of oil, but perhaps some clues as to the longer term trajectory of the price of oil here.
Hmm.
Shorter term, then we're looking at the technical analysis here, like you have, and up on the chart when you pull up the chart, and that's when we're going to look at support levels and resistance levels. We're right at that 200-day moving average right now. We'll see if that holds or if we can stay below that. That seems kind of significant.
Yeah, I think the ultimate break, one way or the other, will be the next bit of insight. We're kind of in a shrinking and consolidating period here, of course, coming off that big move. This is not uncommon. In terms of needing time to pass, the bigger the move to the upside, the longer it takes into the consolidation period to unwind. That's usually the way that works. I often think of it, describe it as standing on the side of a lake, and you take that flat rock and you skip it across the lake. The first bounce it makes is gives you the greatest distance to the next bounce, and then each subsequent bounce is a little less energy, right? And
Yep.
therefore it's closer and closer. It gets tighter, 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 tighter until it's all energy has left. And that's ultimately what happens in these consolidations. You get those coils, or you get price action that makes lower highs and higher lows pinching together and gets you tighter, and then eventually you get outside of that range and it breaks, and then you know which way to take the trade. Typically, is how a trend trader might apply it. So we'll, as always, we're going to keep watching oil for you. But I'd like to remind us, all traders, that it's not just a story about crude. You can also peek in on how gasoline is managed. Love to see this, Brent. Gasoline going down. This is the contract we want to monitor for local gas prices, essentially, or the composite within the country. But ultimately, this is speaking to the gas pump as opposed to crude.
Yeah, my local gas station hasn't seemed to view this chart yet
Yeah,
here, right,
agreed.
Kevin? But yeah, there is a difference between crude oil and the refined product. There's
Hmm.
costs in refining and whatnot, and that's what we're seeing uh, near a potential support level. And so hopefully we can break below that, and hopefully we see that trend. Obviously, a lot of this is just going to depend upon um, the price of crude oil. The lower that goes, that's going to tend to help this out, even though
True.
there's not a perfect one-to-one correlation on that. But it is nice to see it at lower levels here on this.
And then you could also maybe give consideration to the HO, the heating
Yeah.
oil, as a proxy for diesel fuel. This is a different chart, Brent. And the reason I bring this one up is that diesel is so paramount when we start talking about inflation. If we know that crude, generally speaking, crude higher is inflationary, but really it's diesel that's more inflationary because we move so much product cross country in trucks as compared to anything else. So when we talk truckers and airlines, they're really the two that are most impacted by the heating oil futures, I think.
Yeah, so it's come down a little bit, but it seems to be lagging some of these others. So you notice we're well above the 200-day moving average. We referenced
Yep.
that earlier. We're still at the 50-day. Um, so we'll see. But yeah, this affects shipping costs. This affects the inflation, inflation expectation, which can affect interest rate
Hmm.
projections as well. So it's all connected here, Kevin, and that affects all of those kind of affect everybody in a way.
And that's really what I try to bring to the table as much as we can, Brent, is the relationships of these moves with the sectors that they either support or hurt. And I think it's important that we continue to bring these to the table. That 50-day moving average looks very important for this one, everybody. Again, it was a broken downtrend, led to a rally to short-term highs, throwback for a test. If this level maintains, and maybe today's low is the lowest we see in this contract short term, then there's an opportunity for some continuation in the rise of price here in heating oil. So just kind of keep an eye on that. Okay, Brent, let's talk about some of these stocks that have been in the news this morning. We had a couple from earnings standpoints. We've heard from a few different companies. We've got a few upgrades. Let's look at some of these from a technical basis, some of the big ones that people are wondering about. So let's start with AMD today. AMD announced overnight they had a bit of a rough go in the after hours session, traded down as much as 8 or 9%, I think. Let's bring this into the hourly chart. So I'm looking at this now, Brent. This is a 30 days, 1 hour, and you can see the big candle that we took on the earnings announcement. But Brent, it just came back to make a higher low, didn't it, so far? This is an interesting development for AMD, at least in the short run, to see if bulls step in once more.
Yeah, given what it looked like after hours yesterday, it actually is a relatively positive day. I mean, I know that's kind of weird to say on a stock that's down 5% for the day,
Right.
but we've recovered. It's actually showing some positivity today when you're looking at this hour chart here of the candles. So that's that's a positive sign. This is when you see that huge volatility there. That's one reason it's kind of difficult when people look to trade after hours or something. A
Yeah.
lot of times you get huge volatility. Believe me, I look at a lot of after hours charts, and things that initially look negative can be positive and switch on a dime there, or vice versa.
Yeah.
Uh, and so it's just it's tougher. But so we'll see how it continues today. But so far, it's given the earnings report, it's actually a relatively positive situation. But
Well,
it also goes to show just how volatile. I mean, a 5% move doesn't even look that much, on the daily chart there when we look at that. I mean, you look at the chart there and you go, yeah, that's kind of a ho-hum candle in a way. 5% just shows how volatile, almost 6%,
yeah.
just shows how volatile AMD can be.
Well, you're right. The reaction initially negative, but the analysts really seem to like it. So JP Morgan analysts raised the target on AMD to 550, up from 385. That's not too far off given where our pricing is here. 550 is just basically the downtrend line I just drew in. Wells Fargo raised its target to 700, up from 615. Jefferies raised their target to 650 from 640. So a combination of fundamental analysts validating the returns here, the analyst or the earnings detail, even though price reacted negatively, analysts liking this over the longer haul. So the trend here, a little bit under pressure. Yes, we're below the 2050 confluence. So maybe from a trend standpoint, it's still in pause mode. But I'll tell you what, if it happened to somehow recapture that 2050 confluence around 515, things will change a little bit from the trend traders' viewpoint, I would imagine. So positives, at least as it relates to the analyst side of things with AMD.
Yeah.
We also had some upgrades that I wanted to cover here today. There was an upgrade in Alpha Beauty. So let's look at Elf. And the reason I like this chart is the significance that we've just kind of crossed through. This has been a long range move, Brent. This one's been a bit of a struggle, hasn't it? Barb would say this one's been on the struggle bus for a while. Go to a 2-year chart, for example. Let's see. Oh, I'm on the 2-year. Okay. So the 2-year high goes all the way back to August of
Yeah.
24. And you could see we were well off of our bottoms down there at 50, Brent, but trying to get through an important level of just horizontal resistance, I would say. What do you see here?
Yeah. I mean, it's trending up, so that's a good thing. Um, when we look at technical analysis, I think most commonly for technical analysts, they're looking at trend, and then they kind of look at support and resistance, and then there's everything else. We do look at a lot of other things, but the first thing I kind of view is trend. And fortunately, after a lot of just a rough couple of years, in the short to intermediate term, we're in an upward trend on this,
Yep.
so that's kind of a nice thing. But along the way, we've encountered a lot of areas of potential resistance here that we're going to hit. And you drew a key one on there in that kind of gray area on the chart. So we kind of have a conflict. What's going to win out? The trend, so to speak, or the resistance area? when we look forward a month or two. And of course, you never know, but it is certainly a key level of potential inflection here is when we look at that resistance level. But the best chance you have of breaking through that and is starting out with the trend of higher highs and higher lows. And that's what we have right now. So that's a good thing. But one question that a lot of times people have is like, how do I know when a stock's been going down? How do I know when the trend's been going up? Well, we
Yeah.
look for higher lows and higher highs. We're breaking the previous highs, which we've seen,
Yep.
and breaking through previous levels. And so far, we've done that. Jury's still out on future, but right now, that's what we have.
That's exactly how I would look at it too, Brent. A nice development for ELF in the sense that it's well off of those lows. We know those lows around $50, trading now at near 90. So you've seen an incredible move. I mean, from 50 to 90 is 40 points. So you're looking at about an 80% rally off the lows. Pretty tough to argue with that. And yet it has not broken trend in a longer term window. So we've got a short term bullish uptrend for about 2 months working. Beautiful uptrend, mind you. An 80% move in 2 months is tremendous. But there is overhanging resistance, and the stock clearly needs to clear about 95 to make a higher high in an intermediate to longer term basis. And then I'll mention again the reason it made the list today was because they were upgraded at Bernstein to outperform from market perform and a target of 113, which is up nicely from 60. The company, excuse me, what I should say is the analyst stating that the company entered hair care in June, marking its largest category expansion since it launched Elf Skin in 2022. And Bernstein estimates that it could reach about almost 1% of market share in healthcare in hair care by 2029, which would translate into 210 million of fully incremental annual net sales. So they're putting a number behind this expansion into hair care products. So big development potentially, taking out a major moving average like the 200-day with some conviction here. This could be the beginning of something a little bit different for ELF. Brent, we also heard from a recently active company, SpaceX. Let's
Yeah,
take a look at
yeah.
SpaceX, man. They had a gorgeous candle on Monday, a bull engulfing candle at the new low, and it led to a continuation move into the 20-day moving average. But then they announced earnings, and then the market kind of said, "Oh, what a great rally! Let's get some profits taken here," and that's what happened. But we've had some adjustments on this first earnings report that I will offer. But Brent, how would you like to look at SpaceX? Maybe we need to see this on maybe like an hourly chart.
Well, actually, stay here for one sec,
Sure.
because I think the 20-day is pretty interesting. That the big, huge rally we had yesterday, and again, I was actually out yesterday, and so I wasn't actually watching this. I mean, almost surprising the extent of the move here on SpaceX. Before this is pre-earnings yesterday, because
Yeah.
earnings came out after the bell yesterday. So that yesterday's green candle was pre-earnings, and like perfectly to that 20-day moving average. And then earnings comes out, and we have we have a sell-off. And I guess evidently, well, I'll let you go through the numbers there, Kevin, but their loss was significantly less than what people were expecting on that. But
Mhm.
you can change time frames on the chart now if you want, but I just want to point out that 20-day moving average there.
Yeah, and if we're looking for a trend, Brent, it might be as simple as keeping an eye on that blue line. That's the 200, in this case, 200-hour moving average. You'll notice it's been resistant. You could probably be a little fine and go with like a 100-hour moving average. Notice how that's been very consistent. And then now we've gotten into the chop zone where we're above it, below it, above it, below it, and basically leading to technical 101 stuff. Did we make a higher low? Well, we made a matching low right here. So some traders might manage risk against that 109 level, but you'll notice it's getting strong again after throwing itself back from nearly 130 all the way back to that 110 level. So that'll be interesting. Now, what we're hearing from analysts, Clear Street maintained a buy rating on SpaceX. They've put a target at 217 after the Q2 report, stating that they're monitoring Starlink. This is the biggest aspect of profit opportunity for SpaceX at this time. Starlink serving 12 million subscribers, averaging $66 of average revenue per user on Q1 levels. Bank of America analysts say SpaceX beat expectations across top line and profitability metrics in Q1, and adds that the firm is more positive on the company's positioning across key markets for their upcoming Q2 announcements. They reiterate a buy rating and maintain a 235 price target on the shares at Bank of America. And finally, JP Morgan raised the target on SpaceX to 240 from 225. They maintain an overweight rating on shares following the Q2 report. So, positivity from the analyst side, price action a little bit weak, but we're learning something now that we've got enough data points to work with finally, Brent, about how traders are positioning. Now, if I was going to offer one other key note, it's that IPO day high that I drew in on the chart here, that's carried from the daily to the hourly. But Brent, there's a lot of traders who basically say on IPOs, they let the stock do what it's going to do for the first 6 to 12 months, unless and until it trades above the IPO day high. After the initial exuberance. Once it trades back up above that level, then things tend to be a little more calm and standardized, if you will. Doesn't mean that's the only way to go about it. Some traders are going to be interested over the 20-day moving average, but I thought that that was a notable level for keeping a close eye on things. Anything else as it relates to SpaceX, Brent?
No, just it's tough. This is trader talk, and we talk a lot about shorter term moves and stuff. For longer term valuations, there's just so much. It's a very difficult stock because of what the potential is and how you value that. So we'll see what comes out, and that's just going to take time to see. But right now, clearing that 20-day would be kind of a good first start for it.
It would. Brent, we also had an upgrade at Morgan Stanley on a materials position, that being Archer Daniels. I wanted to look at Archer Daniels. This is an interesting trend in a portion of the market that's not really trending. It's one of the staples positions, but it's sitting on a trend line, if you will, here. Look at the 50-day, has been pretty consistent for it. The upgrade here came at Morgan Stanley. They upgraded to equal weight from underweight. They put a target at 79, which is up from 60 following the Q2 report. The company's stronger execution in the first half of 2026 reduces downside risks, according to Morgan Stanley. It creates a more balanced setup going forward for ADM. And honestly, Brent, I mean, that's just a pattern that seems pretty obvious to a lot of traders, right? A pretty clear uptrend in development from the lows in January.
Yes, and one thing I would point out on this is it can be when you're a trader and you see a pullback like this, that can be a big concern. But look historically, look backwards and go, oh, have I seen this before? Yeah, I did, and it bounced. Have I seen it before? Yeah, and it bounced. And so if you look back, it can give you, now that's not a guarantee of what's going to happen in the future, but it does give you the perspective of the kind of pullbacks you may see on this chart going forward. And now, going forward, if we go lower, or if we break the previous lows like that, that would be like a pretty significant thing if we did that. But right now, the pullback, even though it's kind of uncomfortable, no doubt, it's kind of what almost you'd expect in a sense, given the trend line that we have there.
Some good reminders by many of the viewers in here relative to SpaceX. The lockup we're reaching the lockup period, obviously. that bears watching, and the stock is certainly not in an uptrend as of yet. As you all know, we've watched it kind of get beaten up a little bit here. So, Brent, we are at time. I wish I had some notes on it. I did see that Shopify had a big move. I just throw up the chart on it. It's a big break relative to the range it had been in, so it's a significant development from that standpoint. Unfortunately, I don't have any of the details around the earnings in front of me here, but I know some of you were monitoring that. So a nice little breakaway move, if nothing else. Clearing about 6 months of price action there is not a negative, at least. We'll see how that one plays, but a nice 17% move today. Brent, as always, man, love having you on a Wednesday. I feel like we've got a really nice balance to our conversation, and I appreciate you sharing those thoughts and insights with all of our viewers today.
Hey, I appreciate being on with you guys. I look forward to my Wednesdays to be with you. I invite you back, and just make sure you subscribe to the Trader Talks channel, because that's how you don't miss future, not just these webcasts, not just of Trader Talks, but we have a whole variety of topics. And so, if you're interested in futures or options or longer term investing or shorter term trading, whatever, we run the gamut here. And the first step is just to subscribe.
That's right. In fact, up next, top of the hour, that'll be 11 a.m. Eastern. You'll be hearing from James Boyd. Many of you love JB's content. He'll be teaching growth and value stocks at 11 a.m. Eastern, so get that on your calendar. Big thanks to Scott for managing the class chat today. Follow us individually on X. Hit that subscribe button for the channel. And if our discussion was helpful for you, you can hit that thumbs up button for us. We get this reviewed relatively quickly. It'll get into the archive for viewers who are unable to be here live to check this out. And that thumbs up helps us to get this content out to more viewers later today. So again, thanks for being here. Thanks for participating. We appreciate y'all. Have a great Wednesday, everybody. We'll see you again real soon.